Oh, yeah, brilliant. Good evening, committee. I'd like to welcome members, officers, and members of the public watching at home to this Finance, Audit and Risk Committee. The committee plays an important role in the overall governance of the council. Good governance has many benefits, including helping the council to make effective decisions, improve performance, be able to respond to risks and opportunities. Before we start, can I invite the committee member and scrutiny manager to explain how proceedings will work and confirm that officers in remote attendance are present?
Thank you, Chair. So yeah, I'll begin with the officers joining us remotely this evening. If you can just confirm you can hear us, and we'll confirm we can hear you. Salma Yunus.
Yes, I can hear you.
Thank you, Salma. Henry Lau.
Yep, I can hear you.
Thank you, Henry. Marshall Nguare.
Yes, I can hear you.
Thank you, Marshall. And Georgina Chapman. Okay,
So
George
I
is.
think Georgina's just dropped off the call. She was there earlier.
Yeah, is she back on? George, can you hear us and can we hear you? Okay, yeah, Georgina doesn't have audio at the moment. She's just trying to sort that out. All right, George, we'll move on, and then we'll try and come back to you ahead of the annual governance statement and just check that's all in order. So in terms of the procedure tonight, if a member wishes to speak, they should use the speak button located on the microphone unit. The chair will be alerted of your request to speak, and the microphone will turn red, at which point you can speak. When requested to vote, voting will be via the yes, no, abstain buttons on your microphone unit. Details of how members voted will be shown on the screens around the room, and the result will be visible on the YouTube stream. In the event of a tied vote, the chair will have the casting vote. Are there any questions before we proceed? No, thanks. Back to you then, Chair.
All right. Apologies for absence. We received apologies for absence from Councillors Brown, Councillor Lucas, Councillor Patmore, and from independent member John Cannon. No other apologies, I gather. The committee's here. Item 2 is the minutes from our last meeting on 7th of January 2026. Can I propose that we take those as read and approve them as a true record of the minutes of the meeting held on the 7th of January? Can I get someone to second that for me, please? Stuart, thanks so much. Councillor Willoughby. Do we have any comments on those minutes? No, quite happy. Shall we go to the vote on that then?
Chair, that motion is carried.
Brilliant, thank you. So item 3, notification of other business. We have no other business that's been notified. Item 4, chair's announcements. In accordance with council policy, this meeting is being recorded and the recording will be available to view on ModGov or via the North Arts District Council YouTube channel. Members are reminded to make declarations of interest before an item, and the detailed reminder about this and speaking rights set out under chair's announcements on the agenda. And for the purpose of clarification, section 4.8.23 subsection A of the Constitution does not apply to this meeting, so a member can leave the room during the debate and consideration of an item and they'll still be able to vote. Just a reminder, as usual, can you just be mindful if you do have to leave the room, leave at an appropriate point in the proceedings. Probably just one other item that I'll just add on there is just to say thank you to Councillor Nolan for the time that he was chair of this committee and his stewardship of the committee. And if I could just propose a vote of thanks for Councillor Nolan, since I'm now stepping into his role and taking over as chair. Can I get someone to second that for me? I'll take Councillor Ward on that one. Thank you so much. So we just make that as an unanimous agreement from the committee this evening. Thank you all so much for that. Thank you to Sean for his work on the committee. Public participation, item 5 on the agenda. We have no public participation this evening. Takes us to item 6, which is the annual governance statement for 24-25 and the action plan for 25-26. It is Georgina to present. Is she now able to do so?
Oh dear, can you hear me?
Yes, just brilliant. Thank you.
Okay, yeah, so we're bringing the AGS for 24-25 to this committee for approval ahead of the approval of the statement accounts for the same period. The annual governance statement provides assurance that the council has effective governance arrangements in place, and the accompanying action plan highlights where the council is going to be working or where the council has been working to improve its governance. The draft AGS and action plan were brought to the committee last year for comment, and we noted at that point that we would begin making progress on the action plan because the action plan is for 25-26, hence why you've got a progress update on the action plan at Appendix A. Just before I touch on that progress update, I just wanted to note something additional. So you'll notice that we've had the AGS design this time to kind of fit better with the corporate branding. I noticed earlier that there are a couple of paragraphs that have gone missing from the final section between the plain text version and the designed version that you've got, which we can add into the final version. So essentially the missing paragraphs are around rounding off the action plan for 24-25 and noting the kind of key governance areas that we're trying to address with the action plan for 25-26, which is what's at Appendix A. And then also just noting the importance of ensuring good governance arrangements as we look forward to local government reorganisation as well. So yes, those paragraphs have somehow got lost between the plain text and the design version. But if the committee approves the AGS tonight, then we can just literally lift the text, which you did see in the draft version last year. We can just lift that unchanged from the draft and pop it into the design version if you're happy with that. Just on the action plan, I think the only thing I really wanted to touch on before I let you ask any questions you want to ask is in relation to action 3. Just to say that I've had confirmation since I uploaded the documents that everything is up to date and accurate regarding the sub-delegations within service areas. I think that's everything I was going to say before I let people ask any questions.
Brilliant. Thank you, Georgina. Questions from the committee on the annual governance statement for 24-25? Councillor Ward?
Thank you, Chair. Yeah, couple of questions. First, to page 37, or page 37 of our overall pack is page 15 of the document. The first bullet point talking about the ICO compliance, it talks about the review time limit, and there's a supplement on top of the statutory one, and then it goes on to comment about the admittedly small but non-zero failure rate to meet the time requirement. Is that time requirement related? Is that percentage related to the statutory requirement or some sort of supplementary requirement that we've set ourselves? Because I couldn't tell whether from that statement whether it was we're essentially breaching the ICO's hard limits or something more stringent we set ourselves.
I don't think we're breaching any limits because I think they would have noted that, but I don't know the answer to that for sure, so I can double check with the person that handles these cases and let you know.
Okay, thank you. Yeah, I've got a couple of others. Shall I
Yeah.
Thank you. Yeah, the next page, the action plans. It's good to read what's happening and the improvements. What I couldn't find in the report is anything to do with the current state of some of those statistics of why these ended up being action plans. So, for example, in item 2 and item 6, it talks about training rates and phishing detection rates. But do you have the figure, the previous figures that resulted in the fact that this needed to be an action? If you see what I mean, because it talks about some of the improvement, but not why it was a problem in the first place.
Yes, there may be figures in the previous action plan. I'll have to check, but I know with regard to the mandatory training, the approach of the leadership team when we've asked them about this is always that basically anything less than 100% is not good enough. So that's kind of why that was picked as an area to have an action for the mandatory training. And then the reason why it's kind of staggered is because we weren't really sure we would be able to kind of go from 80-something% that it was the previous year to like 100% straight away. Hence, there's kind of a staggering. And with regard to the phishing and the cybersecurity stuff, I think it's the same logic that basically if there's 1% of people falling for stimulated phishing exercises, that's something that potentially puts the council at risk. And cybersecurity was one of the kind of key themes that came out of talking to the leadership team in terms of something where we really needed to strengthen governance. Hence why we've said we want to aim for 100% compliance with the phishing exercises, because it just means that there's less chance for cyber breach if people are kind of understanding those and being really cautious with those. But we haven't achieved, I think with the mandatory training we have actually achieved a really good level, but with the phishing we haven't yet achieved 100%.
Okay, thank you. I don't think it needs to go in the report. I wasn't saying we have to modify it, but it'd be good maybe if there's a separate follow-up action just to get the stats of what this looked like that caused these actions. So because I guess my other concern is, where does that go corporate governance wise to make sure somebody is on top of it in terms of peer or some other committee or through cabinet or somewhere. So just understanding that offline.
So would you like stats for 23, 24 or earlier that as well?
Whichever the relevant period is that cause these things to need to be actioned, so I guess is in your opinion.
We can probably, I think the mandatory training one, I think, has been an action in some way, shape or form for like quite a few years now. So I think we can probably, if I get you stats for that, maybe for a couple of years going back, I think the phishing thing's just been an action as of this
Yeah, thank you. Yeah, I think that's just for our information.
Yeah.
Thank you. No, that was it. That was two. Thank you.
Are there any other questions for Georgina from the committee? Can I just ask two things, Georgina? On para 8.2 of the report, it's highlighting the fact that the timescales between the end of the relevant financial year and then the reports are still quite far apart, but they are closing. Are there any particular risks associated with that, do you think?
I don't, as in the closing or them still being too far apart.
Yeah, being so far apart, although that they are getting shorter, they're still quite far apart, as you recognise, right?
I think at the moment, I went on a sit for training yesterday and today, and I think they're fully aware that everyone's basically in this situation, and they didn't really raise any specific kind of risks with that gap. I guess it just kind of means that this is why we kind of did this with the action plan last year and the year before, is that because obviously the action plan is looking forward, so it's the AGS looking backwards for 24-25, reviewing governance arrangements for that period, but then your action plan is for the next year, so 25-26 for us. We just want to kind of make sure that we're starting on the action plan as soon as you guys have seen the draft and seen the first version of the action plan. Otherwise, we'd be here tonight saying, let's start work on the 25-26 action plan, and there's only like, a month really left of 25-26. So I think the main thing is making sure that you get started on the action plan in good time, which we have been doing for the last 2 years in recognition of the kind of long gap between draft and final version.
Brilliant. Thank you so much. Any other questions? Don't see anyone to ask anything. Or Julia, thanks so much, Julia, for outlining the report and for answering those questions there. So the recommendations are first 2.1, that the committee is recommended to approve the amended annual governance statement, Appendix A, including the amendments as proposed by Georgina in her introduction. And 2.2, that the committee notes the current position of the actions within the annual governance statement action plan outlined in Appendix B. Can I have a proposal for that, please? Thank you, Daniel. And can I have a seconder? Thank you, Stuart. There's only 3 of you, so we'll get through that. No. Thank you both. Is there any debate on the annual governance statement? I see no debate. No. As Georgina highlighted, it's great that we've got those drafts earlier in the year as well. That also addresses some of those concerns in the lags, and we are closing on that timeline between the end of the year and that statement. So again, it's great work and more recognition of the work that our officers are doing to make sure that we're on top of all that we need to be. In which case, should we go to the vote?
Chair, that motion is carried.
Brilliant. Thank you. Thank you, Georgina.
Thank you.
Move on to item 7, which is the statement of accounts for 24-25. We have Salma, Henry, and Marshall to present the KPMG reports to start with, and then we'll shift over to Ian to present the statement of accounts.
Thank you, Chair. So good evening, everyone. So yes, we've got the whole team out today to present the papers to you. We've got Henry as the manager, who you might recognise from previous audit committee, and then Marshall as well, the assistant manager. So we've got our three items in the agenda today, starting from page 156 of the pack. We've got our auditor's annual report, we've got our ISA 260 report, and the management representation letter. I'll present the auditor's annual report at the end once Marshall and Henry have presented the ISA 260. But I suppose overall, we've completed the audit for 24-25. We've tested the in-year kind of movements in income and expenditure, and then the year-end balances in relation to assets and liabilities as well. And then you'll have seen from the ISA report that our audit opinion is disclaimed. And that's on the basis that we've been unable to get sufficient appropriate audit evidence in relation to the opening balances, and that's as a result of the disclaimed opinions from the previous years. So that's we determined that as quite a material and pervasive kind of impact on the financial statements, and that's what then drives the disclaimed audit opinion. But hopefully you'll kind of recognise that as part of the backstop arrangement. So that was the kind of expectation in terms of the audit opinion for this year for the authority, as the 23-24 and 22-23 were disclaimed. When I present the auditor's annual report, I'll give you a bit of an update in terms of how we're building back assurance into 25-26, and I'll explain a bit more about that as well. So I'll just hand over to Henry to kind of talk through the ISA 260. So we'll assume that the reports have been read, so we'll just focus on the kind of pertinent points, but do feel free to comment and ask questions. Thanks, Henry.
Great. Thanks, Salma, and good evening, everyone. As Salma said, we'll take the report as read. The first area I just want to bring committee's members' attention to is the outstanding matters on page 6 of the report, or page 184 of the pack. I just want to reassure committee members that these are matters which are normally outstanding at this stage of the audit, and they do not cause a risk to the completion of the audit before the backstop date of the 27th of February. On the next couple of pages, we'll go through our detailed responses and findings to our significant and other audit risks areas. Given the significant amount of crossover, I'm going to discuss the first two significant risks around the valuation of land and buildings and the valuation of investment properties together. For these two risks, we identified two control deficiencies, control recommendations. The first one is around the management review of valuation assumptions of land and buildings and investment properties. So for this one, the auditing standards requires us to report on the design and implementation of management review controls. And in line with the ISA definition, the current process at the council is ineffective. However, the ISAs do acknowledge that this is the threshold to meet this definition is quite high, and it is difficult for management to design a effective control which meets this requirement. And this is quite similar across other district councils, similar sizes, even bigger than North Herts. So whilst we do note that the council does have processes in place and doesn't meet the requirement, management are comfortable with the current processes in place. And to meet this requirement, this would involve like a predictive review of the methodology and assumptions. And this would involve the council having their own valuation expert. But as noted in the management response further down in the report, striving to meet the requirements the ISA would require a lot of time and money, and it wouldn't constitute a good value for money in doing so. And then the second recommendation is just around the relation to the valuation of land and building risk only. So during our testing, we identified that the accounting treatment for one of the upwards evaluation movements wasn't accounted for correctly. And as a result, we have raised a recommendation for management to be aware for similar accounting treatments in future years. The amount involved was only £48,000, so we did not raise an audit misstatement for this error. The next significant risk was around the valuation of post-retirement benefit obligations, which covers the estimation uncertainty around the local government pension scheme, being the Hertfordshire County Pension Fund. And similar to the management review control recommendation we identified earlier, we've identified a similar one for this risk, but from the lens of the actual assumptions rather than valuation assumptions. We have also identified one unadjusted audit misstatement which relates to the 23-24 pensions figure, but I'll let my colleague Marshall discuss that later on. And a final significant risk was around management override controls, which is a mandated significant risk on all audits. And again, we've identified one similar control recommendation around the management review controls for this risk. And then, given that the council undertook a general ledger migration in August 24, we've identified another audit risk around this migration. We have completed our work now, and we haven't found any issues that require reporting to the committee members. And just jumping forward a few pages to page 199 of the pack. So this is where we discuss our value for money findings. So I won't go into too much detail now, as Sam will cover the majority of this in our auditor's annual report. But I did want to highlight the improvement observation on page 200 around the partnership arrangements, which we did discuss previously at the Finance Audit and Risk Committee in November. And just want to provide an update to the committee members that we are comfortable that management have now implemented the required recommendation for this observation. So I'll just stop there for questions before I hand over to Marshall to go through the appendices.
Brilliant. Thanks so much for that. Are there questions on those elements of the report from the committee? Yes, Councillor Wright Mason.
Yeah, thank you. It was very comprehensive, and it was kind of covered slightly. My question is kind of about LGR. Obviously, I appreciate the points about the disclaimed opinions and the kind of backlog, but I just wondered if there's any sort of risk that any of this could kind of complicate the transition to a successor authority on things like opening balances, reserves, stuff like that.
So at the moment, I think in terms of the actual impact of LGR on the accounts, it's quite early stages because it's just I believe is it out for public consultation at the moment. So it's kind of early days in terms of what it actually means for the different authorities within the region. We do look at it as part of our work on value for money. So as part of our 25-26 value for money risk assessment, it'll probably be a key part of that because it's more that's happened during the 25-26 period in relation to the discussions with other authorities and kind of the submission that the authorities made. But in terms of actually, you're right, it is a risk in terms of that transition, but it's probably a bit more of a forward-looking risk rather than something that would impact the current audit report for 24-25.
Okay, thank you.
Any other questions from the committee for this part of the report? Yeah, Paul.
Oh, thanks. Just a question, sort of noting the management responses on some of the issues that you've highlighted is probably a question for Ian, I guess, where do those things get tracked to make sure they get closed out subsequently?
So is that a question for Ian, or do you want me to take that, Ian?
I'll take it. Sorry, my microphone was being a bit slow. So they'll be tracked in future by KPMG, but appreciate you might want more timely because that'll be probably in future, a year hence. So happy to kind of report back a future meeting on those to kind of reassure you that the work is happening.
Okay.
I can also say that we have now got management responses for the 3 that got missing actions against them. So happy to go through those if you'd like me to, which might be helpful just to kind of complete off the report. So in that list of control deficiencies, there are a couple in relation to HR matters, which are numbers 6 and 7. We believe 6 was pretty much a one-off, but we are going to implement spot checks to make sure it was a one-off. And so therefore we'll be doing spot checks across that period, across the next year to kind of make sure that doesn't happen again. I think any other control on that is probably disproportionate to the sort of the effort involved, because we do think the actual system is fundamentally just working in terms of paying the right amount of money to people. It's just there was an error in kind of the contract side of it. So, but we'll do spot checks on that. And the payroll contract retention, we're implementing a new applicant tracking system, i.e. when people apply for jobs, they go through that system rather than the current one we've got at the moment. That'll be much better at kind of retaining contracts. We will also go back to 23-24 and just do a review of all those and make sure we've got all those in place for the period that's been identified as having missing contracts for. And then finally, there was one, number 12, on that you mentioned earlier about the upward valuation of assets, so revaluation of assets. We are currently implementing into the new finance system the assets module on that, and then all our capital accounting will go through that module, and therefore all the adjustments will be automated through the system rather than on spreadsheets, which should eliminate the chance of that happening again, because that will make sure that where there is a balance on the impairment, that's done first rather than the revaluation impact. So that will kind of sort that out when we do that, and that is planned to be implemented before the end of this financial year. So it's ready for the closure accounts for 25-26.
Great. Thank you.
Any other questions from the committee? Don't see anyone coming forward. So turn back to Salma, Henry and Marshall.
Okay, thank you, Chair. Good evening, everyone. So I'll be talking you through from page 29 of the ISA 260. So the first uncorrected misstatement there is relation to the remeasurement of the net defined benefit liability. And this emanates from the fact that we receive two rate of returns from Hertfordshire Pension Fund. So the amount disclosed in the draft F was based on the first estimate, but we are happy with this not being corrected because these figures from pension funds tend to vary from year to year, and also because it doesn't affect our statement of comprehensive income and outturn. Moving on to page 30, we have got a corrected audit misstatements, which is there was just a classification issue between the debtors and creditors, but this has been adjusted now in the current set of Fs. We also had the corrected misstatements in relation to the accounting policies. There were just missing paragraphs regarding the requirements of ISI 8 accounting policies. Then moving on to page 31, we have got control deficiencies. So the first three, which pertain to the management reviews, have been discussed already by Henry. So I'll skip these ones and go to page 32, starting from control deficiency number 4, bank reconciliation. So during our walkthroughs, we identified that some of the bank reconciliations were not showing the signatures of the preparer and the reviewers. But yeah, based on the management response, they were supposed to update this by the end of the year, and acknowledge the fact that it was also mainly due to the change of geo system. Control deficiency number 5 also refers to the same issue of not showing the reviewer and preparers of the housing benefit subsidy reconciliation. And there's a risk in that the council might not be able to get the claimants that they are supposed to be receiving. Control deficiency number 6, payroll contracts accuracy. Through our review of the employment amendment letters, we identified that the annual salary from the letter did not match the payroll system or pay slips, and there's a risk that employees might not be getting the correct salaries. Then control deficiency number 7, payroll contract retention. On this one also, we also noticed that the employment contracts were not signed and returned properly. Instead that for the requests made for 2023-24, NHDC were not able to provide the requested employment contract. Control deficiency number 8, expenditure cutoff. We also identified that 2 expenditure transactions totaling 13.2 had not been accounted for in the correct accounting period. Though, yeah, the quantitative figure is immaterial, but we still have to report this control deficiency. Control deficiency number 9, impairment review. Also notice that the council did not have a formal impairment review of the assets that were not subject to reevaluation. Control deficiency number 10. This one is the overstatement of debtors and creditors. This one emanates from the revenue received in advance, where the council bills the clients in advance. So they tend to be overstatement of debtors and creditors at the year end, though the impact in the accounts will be 0, but we just thought the accounting of it might need some adjustments to be made. Control division number 11. Also noted the late submission of the draft accounts as per the regulations, though we noticed an improvement from the previous year. And also we acknowledge the fact that it might also pertain to the geo migration that took place during the year. Also, control deficiency number 12. We also identified that there was an upward revaluation movements in relation to the Churchgate Shopping Center that was credited directly to the revaluation reserve instead of first reversing the prior impairment losses recognized. So, which result in a risk of overstatement in revaluation reserves. Yeah, I think that's all the control deficiencies we have identified. So these ones, yeah, it's important to note that these are generally issues we regard best practice, and would feel to be best if they can be resolved or put in place. Thank you. I don't know if you have any questions regarding to the misstatements and deficiencies I've talked about.
Thanks so much for the overview. Are there questions from the committee on the points that were just highlighted for control deficiencies? Councillor Ward.
Thank you, Chair. Just noting also what Ian Cooper said earlier on around the management response on some of these. So just focusing on the higher priority one, so the 3 that are priority 2 at the start, so 1, 2, and 3. Basically, if you've understood this right, our position on the first 2 is we're not going to do anything about it. So essentially, that will keep on occurring. So we're basically accepting there's a risk around that in terms of our control environment. But number 3 is being actioned. Is that a fair position on those ones?
Yes, we believe the cost and effort of implementing 1 and 2 are disproportionate to the impact they have. They require us to duplicate effort. They also both relate to amounts that, whilst important to the accounts, don't affect the general fund balances. They are amounts that will get kind of put in, then taken out again through reversing adjustments. We will try and comply with item number 3. We believe we can, albeit we need to go into more detail on what the ISA 315 requirements are. We believe we can further strengthen our processes in relation to journals. But yeah, we'll look at implementing that by September.
Thank you.
Any other questions from the committee? No? It's all
Okay, thank you.
Thanks so
I'll
much.
then hand over to my colleague Salma. And I just want to say thank you for everyone. If I can be excused, I'll have to drop off the call. Otherwise, thank you.
Sure. Thanks so much for your presentation of that part of the report.
Thank you so much.
Is there more from Salma and Henry on the KPMG reports?
Yeah, thanks, Marshall. Thank you, Chair. Just to kind of finish on the auditor's annual report. So this is page 156 of the pack. So hopefully you'll recognise this report because it did come to the November meeting as well. And it's been updated since to bring it obviously up to date, as in up to the end of January. But the overall conclusions remain the same that we reported to in November. It does summarise the audit of the financial statements as well, but I won't go through that because you've already seen the findings from what Henry and Marshall have just presented. So in terms of looking at the value for money element of the work, you'll notice on page, sorry, my computer's running a little slow today. On page 167 of the pack, there's a bit of a summary there in terms of the three domains that we look at around financial sustainability, governance, and improving economy efficiency and effectiveness. And as part of our risk assessment, we identified 2 risks of weakness, potential risks. And then once we've completed some further management inquiries and other procedures, we've determined that they don't give rise to a significant weakness. So you can see the actual significant weaknesses identified is no across those 3 domains. So in that respect, it is a clean value for money kind of conclusion for 24-25. And so that was all I was going to focus on as part of presenting the auditor's annual report. And then the other item that we have is the management representation letter. So this again is auditing standards require us to obtain certain representations from management in terms of their, the accounts that are presented for audit and the accounts that are presented to you today for approval. And we haven't requested any additional specific management representations. They are just the normal standard ones. So I just wanted to mention that as well, that there aren't any specific ones that we've included as part of our audit inquiries. I'll just pause there if there's any questions, and then I'll kind of, if it's okay, I'll just kind of give an update on 25-26 and that building back assurance element that I mentioned at the start.
Yes, thanks so much, Salma. Any questions on that last little bit from Salma? No, doesn't look like there's anything from the committee. So turn it back to you, Salma, to wrap up.
Okay. Perfect. So in terms of the actual, so as I mentioned at the start, it was a disclaimed audit opinion for 24-25. And hopefully you're aware of that in terms of the backstop arrangements that the ministry and like the NAO and FRC kind of agreed to bring back assurance back into the local government sector in terms of the audit and like financial statements as well. So the Ministry of Housing, Communities and Local Government did send a letter to authorities and to auditors in November, just kind of reconfirming this timetable. So the actual target date is that by 27-28, the disclaimers should have, hopefully the disclaimed opinions will have ended, and then it will be a kind of going back to that standard audit cycle of getting doing the standard kind of true and fair audit, and then that there's no disclaimers involved in those audit reports. For 25-26, what we're going to do to kind of support that and build back assurance for the authority, we're going to do some risk assessment work around the 2 disclaimed audit periods, so 22-23 and 23-24. And we will do risk assessment procedures just in terms of identifying whether there's any additional or kind of detailed audit work that we then need to do to then work towards a clean opinion. So we've got the disclaimed one obviously for 24-25. Then as part of 25-26, we will do this risk assessment, and then we liaise with Ian just to kind of discuss, well, what does that look like for 25-26, and then also for 26-27 as well, with a view to obviously building back assurance and reaching a point where the authority then does get, hopefully, with the accounts being true and fair, a clean audit opinion at the end of that as well. The ministry is quite keen that entities do kind of progress and proceed, at pace with this agenda as well. And they have asked by the 31st of July for us to report back to them in terms of a bit of a status update on each of the entities to say, are there any risks potentially that this timetable of 27-28 isn't going to be met? So we'll keep you informed of that as well as our work progresses in 25-26.
Brilliant. Thanks for the update on that. Any final comments or questions from the committee for the team? No, all very comprehensive, and the reports were very helpful, both as drafted and as presented. And so thank you to Salma, Henry, and to Marshall. Ian, is your hand moving to make a comment? Yeah, okay, just a moment. Ian wants to make a comment.
I was just going to pick up on the statement of accounts bit, if you're able to do that bit, Chair.
Yeah.
Yep. Okay. So obviously you've got all the audit work from KPMG. We've also in this agenda item got the statement of accounts themselves, that rather long document in the middle of all the stuff we've been looking at. Obviously you should hope you get confidence that whilst they have a disclaimed opinion, there has been a lot of work done by KPMG, supported by me and my team. So there has been work looking at these accounts, and there is kind of assurance there around the statement of accounts. You are asked to approve the statement of accounts, and that they can be signed, as well as the management representation letter. There is still a bit of ongoing work by KPMG, so the recommended decision 2.4 is there just in case that unearths any more minor changes to be made to statement accounts before we get to sign them, which we'll do by the end of the month. And we'll arrange time with the chair to kind of do that process for the week after next. In the statement of accounts themselves, there are some bits highlighted in yellow. These are changes in the draft statement of accounts. That's why they're in yellow, that's why they're just starlight colours. And just also to highlight that I've made a mistake on recommendation 2.3. It's talking about the chair of the committee sign that management representation letter. As a management representation letter, it gets signed by myself. So can we change that to be signed by the Director of Resources? He approved that signing. But apart from that, that's what I wanted to cover in terms of that bit of the report.
Thanks for that, Ian. Anything on that, specifically on the narrative report, that anyone wants to ask questions about? It's very interesting and really long. Hopefully you've got across it. But it is very helpful as well if you want to know where all our expenditure is going potentially. No, in which case, thank you to everyone involved in pulling together the statement of accounts. Thank you to Ian for pulling those together, and thank you for the team from KPMG for continued ongoing work on this as well. So the recommendations, 2.1, that the committee note the KPMG annual report as attached at Appendix B and the KPMG year-end report to the Finance Audit and Risk Committee at Appendix C. 2.2, that the committee approved the 24-25 statement of accounts as attached at Appendix A with the auditor's report to be added, and that they can be signed by the chair. And 2.3, that the committee approved the signing of a management representation by the Director of Resources. And 2.4, that if there are any minor changes required to the statement of accounts or to the management representation letter, they can be approved by the chair of the committee. Can I have someone to propose that, please? Councillor Willoughby, thank you. Can I have a seconder? Councillor Ward, thank you. Any debate? No debate. I think just to comment on that, although these are all disclaimed accounts, it's even more important that we have the oversight and review of all the processes that go into all of the accounts overarchingly, so that we can ensure the robustness of the processes at the very least, and therefore we can have some degree of confidence, as the conclusions say in the reports, that we are in good position overall. Brilliant. In which case, can we go to the vote on that?
Chair, that motion is carried.
Brilliant. Thanks, everyone. In which case, let's move on to item 8, which is the budget 26-27, and that's revenue and capital budgets. And we'll start with Councillor Albert to provide an intro, and then we'll turn back to Ian Cooper to present the report.
Cheers. Thanks, thanks, Chair. And I think colleagues will be pleased I won't be as long as maybe I might be in a couple of weeks' time. But I think wanted just to really, I think, to introduce this item and obviously thank to Ian Cooper and all his team for their work. I think as this committee knows, that we've been very cautious and pragmatic right through the budget process, the medium-term financial strategy. We knew about LGR, but we clearly had to plan on the basis that this council might still be here in a few years' time, and it would be irresponsible to do otherwise. We set out the budget workshop, some areas where the administration wished to invest if we could afford to do so, care line, economic development strategy, planning, IT capability, and so on, but all while recognising we might still need to make savings. The provisional settlement, as you know, was positive before Christmas, alongside changes to pension contributions and the extended producer responsibility, EPR. And that 3-year settlement, which was from government, was really welcome and gave us that additional certainty for the first time for many years. The general fund balance is healthy and strong. As the report mentions, we hold other reserves, which apart from the business rates, grants reserve, all those balances are held for specific purposes. And the result of our analysis there is more likely to produce additional funding rather than shortfalls that need to be addressed. So that did look us really, since we've last met, to look at some further areas where we might be able to invest and in our communities across the district, including part of this funded from a transfer from some of our revenue reserves into the capital programme. But we wanted to see the final settlement before we made those final decisions and proposals. We had the final settlement yesterday, practice to confirm the numbers that we've got in the provisional settlement, with the exception that we've got an extra, certainly in 26-27, it is a reducing amount, an extra £70,000, over 70,000 extra for homelessness grants, which again is welcome. So obviously that you've seen, and colleagues here will have seen that list of investment proposals that we're looking to make. And I think the important one there, which I think will be welcome right across the district, but obviously particularly in Royston, is proposal that we talked about in last year's budget. We've done the work and we can find a way of funding a learner pool in Royston. And I think that is hugely welcome, a huge social benefits, and hopefully that will be something I think all the council will really be happy to agree and sign up to. We're looking about how we can provide digital signage in car parks in Hitchin to promote better use of our car parks. Again, something we think is really important, and obviously sits alongside the Churchgate project. We've got some additional water play features at the North Arts Leisure Centre, and you'll see a number of other sort of smaller proposals looking about some funding for community forums, the memorandum of understanding that we have with groups like Citizens Advice, North Arts Minority Ethnic Forum, CVS, North Arts CVS. Again, we're looking to see how we can increase some funding for there. Some additional outreach work that the overview and scrutiny meeting talked about in terms of our museum storage project. And indeed, Chair, hope that you've welcomed especially is some feasibility work around additional allotment provision in Great Ashby. And I think that, again, something that has been talked about for a long period of time. We're looking to create an LGR, local government reorganisation reserve of £2 million, £1 million in each of the first 2 years. We may not need as much as this. So that's the kind of proposals we're looking at there. But I think just in concluding, Chair, I think it's important to say, and I think that it would be irresponsible, in my view, for us not to increase our council tax by the maximum amount of 2.99%. We're very conscious about the economic impacts of all the things we do, but I think the importance of actually bringing that extra £400,000 a year on year for our vital services, I think freezing council tax or a lowering increase would decrease the resources that we have available year on year. And the increase that we're proposing is around half of the £15 a year that the police commission is proposing, and significantly less, obviously, different services, I would agree, of the £85 a year that the county council is proposing. So I think all of those things, hopefully this committee, and I say Ian's going to take you through the detail, will set is I think a balanced, and it literally is a balanced budget as we go through the period. And I think obviously it provides additional investment for really important services and things that we see that will really benefit our community, not just for today, but like in the learner pool for many years to come. So I'll conclude there, Chair. Thanks for allowing us those few moments. I'm really ask Mr. Cooper and his to go through the detail, and obviously take any questions later on.
Thanks so much, Ian. Ian, would you like to pick up from there?
Thanks, Chair. I'll start my usual preface around the fact that this is around a look on the risk governance assumption side of the report. If you want to do political debate, save that for February, the end of the month. So this is around that focus for this committee, and therefore I'll sort of take you through with that lens on to kind of take you through the report. In terms of the provisional settlement, that has now become a final settlement as of yesterday, with no significant changes, a small increase in the homelessness grant, but no other changes to our funding for future years. That's good news in terms of no changes there for us. So we will obviously update that for the final version of the reports that go to council to make sure that's reflected fully. In terms of how we set the budget, we obviously do start with what the funding is available, and that's sort of set out in the paragraphs up to paragraph 8.8. We then look at any risk factors that could affect, where there might be a shortfall in budget. So there's a section in paragraph 8.8 in the table there that looks at, are there any specific grants that were there any issues with in future years that could create spending pressure? So we've done that analysis, and we're happy that there's nothing there in those grants we've looked at. We don't look at all the grants. There are some very small ones, but those are the kind of big ones that we've kind of focused on there. We then look at our balances and reserves. So table 4 goes through all our specific reserves. So we're set up for a specific purpose, making sure it's sufficient in there to cover that purpose in future years. And in general, there is plenty in there. And as highlighted, we'll be releasing some of the balance of the MHCLG business rate grant reserve to support general fund expenditure from there. We then look at what the minimum general fund balance should be. So that's a recommendation I have to make as your Chief Finance Officer, and the workings from paragraph 8.14 to 8.16 give the analysis there to give a recommended minimum balance of at least 3.5 million. And as you'll spot later on, we're far above that, which is a good sign in terms of our risk management approach. I'm then going to sort of drift across into the section 25 report, which is one of the appendices. That is my analysis on the reliability of estimates. So it goes into a bit of detail around kind of where there are assumptions in there and how reliable they are. It also looks at the SIP for Resilience Index, which provides some kind of comparative analysis against other authorities. As it's comparative, it does have its downsides, but worth kind of reflecting on just to make sure there's kind of nothing untoward going on there. So that provides an explanation about any sort of discrepancies in there and where we sit on those. And then that all leads through into kind of a cumulative impact, which is presented to the appendix to the report, which is Appendix E, which gives the general fund position across the next 3 years, chosen a 3-year time horizon on the basis we've got 2 years while we're still North Herts, and then 1 year probably in the new unitary authority basis following LGR, but to provide kind of a basis for setting the budget for that future unitary authority to make sure we're kind of still in that kind of sensible position around a balanced budget. So that's kind of looking at the report and the headline summary. If there are any questions in the detail, happy to answer them.
Do you want to say something about the outdoor pools? It's in the recommendations, the covers, before we move to questions.
Yeah, so there is a recommendation there that we'll go to council. That's because it makes sense to do any work on the pool covers of the outdoor pools before the season starts. We therefore council be asked to bring that forward into this current year, so the work can start sort of as soon as the report's approved in February rather than wait till the 1st of April, because generally when council approves budgets for next year, it has to be from the 1st of April. No spend can be incurred before that. But to make sure those are done before the outdoor pool season starts, that's request at 2.8 to bring that spend forward.
Brilliant. Thank you both for those intros and outlines. And yes, indeed, Ian, I do welcome the support coming for Great Ashby and the allotment provision, as I am sure that colleagues in Royston will no doubt welcome the support for the learner pool as well. Are there questions on any of that that's been presented by Ian and Ian? Daniel.
Yeah, no, thank you to both Ian. So that was very comprehensive. I just kind of had a point of clarification on table 3, page 234 about grants on the domestic abuse safe accommodation grant. I wasn't fully sure if I understood the explanation. I don't know if there's any other detail on what that is and why it's now 0. I assume the government just don't provide it anymore, but
yeah, we used to get a specific grant in previous years. As of last year, it was moved from being a specific grant into general fund grant. At that point, we created a specific budget for it. So we took some money out of the general fund budget to create a budget for it. So it's now got an ongoing budget to cover that going forward. So the fact that it's a 0 grant now creates no issues in terms of service delivery.
great. Yeah, that's what I thought, man. Thank you for clarifying.
Yeah, thanks, Chair. Just on the, given what we're here to do, the risk section, so page 237, and the assessment methodology for that. I noticed the tables later on with the breakdown in it, but what's the rationale for the allocation of the 0 weighting on the risk allowances for the low likelihood financial risks on there? It just feels like we're essentially saying it's impossible, they're never going to happen, therefore we'll absolutely have 0, as opposed to some sort of low weighting of them, like 10% or 5% or something. I'm just wondering is that best practice? Is that a standard that all councils use, or is that something we should think about? I was just curious, when I was looking at the GDPR one, it's a big number, but then it's basically zero rated because of that low impact thing. And just reflecting on some of those other comments earlier on, it just seemed a bit odd that it's literally 0 for anything.
It's an established practice we've had over many years. I think what we also have done across many years now is also looking at the impact of this throughout the year. So in every single revenue monitor report, you will see kind of our performance against that risk buffer. So we look and see what risks come through against that. And I guess the exception has been this year, but certainly a number of previous years, we've never, ever got anywhere close to the kind of allowance there. So to some degree, it works in terms of giving gives a reasonable number in terms of the allowance we made for those risks. But do take your point that, that we could take a different approach and have different percentages. Certainly, we wouldn't want to take it too high because we don't want to have the general fund balance too high.
Yeah.
But is that balance around kind of?
I wasn't suggesting that the overall figure is inadequate. I just think it just looked
Yeah.
a bit anomalous that we kind of literally 0 weight things in there. Otherwise, why they're risks? So.
But yeah, I mean, certainly it's a fair comment. I mean, it makes a difference now because obviously, if I paid that 10%, it would add 200,000 odd to the minimum level, and it would still be way above that level. But yeah, I take the point around maybe we should review it at future years around whether we should apply a slightly different weighting to at least give some credence to the lowest one.
Yeah. No, I'm happy if we take it away for an improvement for next time. I don't think it's worth, given what you said about it's an immaterial threshold anyway. Effectively, right now I don't think it's worth changing right now. So.
I mean, I suppose there's a point there that you identify risk, but the likelihood is so low that don't need to make allowances for it, but take the point. It's a little bit there. Any other questions or comments from the committee? Dominic.
Thank you, Chair. I'm just looking on page 232, paragraph 8.5. So the extended producer responsibility payments that the council would receive. I was just wondering if you could explain a bit more about the assumption of a drop-off in future years and whether that drop-off is still going to be 20% occurring each year?
So the assumption around the drop-off is that the idea of EPR is a levy against companies' use of packaging to encourage them not to use packaging. And therefore, the assumption is that over time they will seek to find ways to reduce their packaging, because that's the whole target of it, is not to create packaging in the first place. We're not having to dispose of it. So that's the drop-off, is that if it's there to influence behaviour, hope the money should start to decrease. The 20% is honestly just my guess around a prudent amount to assume for a drop-off. I had an assumption of drop-off from last year into this year, and the amount went up. So it is difficult to tell which way it's going to go. It's just a prudent assumption, because there are two factors at play. One is around the actual amount of packaging, but also the cost of efficient disposal of it, and costs do go up over time with inflation. So yeah, there are two factors at play. So it might be that we're here this time next year and the amount's gone up again. But I think it's safe at the moment to assume a decrease each year and then see where we go. It's better that, I think, than then suddenly a big kind of shock if there is a reduction we weren't expecting it.
Thank you.
Paul.
Thank you. Just on the process one, I'm sure we touched on this before, but I'm not picking on these in particular, but a couple of examples on page 250 around TBC items. So the Hearts Futures, for example, R42, and I think the ones mentioned earlier on the community groups MOU R45. How does this work? I mean, including something in a budget with no figures is in one sense kind of pointless because there's no numbers, but does it allow it to be added easier later on once we've got some idea of what the numbers are for those, or how does that change the governance of the budget?
So if there were no numbers there, you wouldn't be asked to approve it at council. The intention is that by cabinet, or by the end of cabinet next week, there will be some numbers in there. We've had a steer from cabinet. They'd like to look at what numbers to include in those. So we're still working on those to kind of get some final numbers. So by this time next week, we should have numbers in there. And then the budget being approved by council the week after, therefore should have
See that.
the numbers in there to be approved.
Great. Thank you.
I think you'll be okay. They're not asking you to approve a blank check on those columns, but it's well worth asking the question, I suppose, just in case. Any other questions for Ian or for Ian from Cabinet? No. In which case, move to the recommendations, and there's a few, so bear with me. First, 2.1, that Finance Audit and Risk Committee comments on the budget process, assumptions and risks contained within the report, and in the context that Cabinet recommends to Council that 2.1 notes the position on the collection fund and how it will be funded. 2.2 notes the position relating to the general fund balance and that due to the risks identified, a minimum balance of 3.5 mil is recommended. 2.3 notes the Chief Financial Officer's Section 25 report on Appendix D, which provides a commentary on the risks and reliability of estimates contained in the budget. 2.4 approves the revenue savings and investments as detailed in Appendix B. 2.5 approves the capital programme as detailed in Appendix C. 2.6 approves a net expenditure budget of 27.321 mil as detailed in Appendix E. 2.7 approves a council tax increase of 2.99% in line with the provisions in the medium-term financial strategy. And finally, 2.8 approved bringing forward the capital budget for pool covers at the outdoor pools to 25-26. Can I have a proposer, please? Thank you, Daniel. Can I have a seconder? Thank you, Stuart. Debate. Or just comments, observations? No? Brilliant. I just want to say thanks to everyone for the work that's gone in to the budgets and putting forward all these proposals and bringing them to us overall. And yes, as I said at the outset, some welcome line items there for areas that perhaps have been long on the agenda but not yet quite addressed. So hopefully we can look at that and take those forward. Any other comments from anyone? Think not. In which case, let's go to the vote, please.
Chair, that motion is carried.
Brilliant. Thanks, everyone. In which case, we move swiftly to item 9, the investment strategy 26-27. Councillor Ward, you make your exit.
Declare my interest in this by nature of my employment, and I'll exit stage left or stage right or whichever it is. That way.
Good to see you. Thanks.
you.
Thanks for joining us.
Cheers.
Now that Councillor Ward has left the room, Ian Cooper to present investment strategy 26-27.
Thank you, Chair. As with the last report, this is going to be a cabinet decision to refer on to council at the end of the month. The structure of the report is, as in terms of the appendix, is set out in guidance around what it should cover, which is a sort of series of building blocks to get through the report, and also a number of kind of indicators we need to set for the year, which we then monitor against during the year in terms of our kind of capital spend and treasury strategy. The report itself, in terms of the appendix, is pretty much in line with what's been presented in previous years in terms of structure and most of the content, albeit the balances change. We spend more of our capital. We therefore have less money, but that's to be expected, and therefore less to invest. The main change that we have made this year is in relation to the motion passed by council in December 2025. We have regular meetings with our treasury advisors from MUFG, and we have a specific meeting with them around that motion and looking at how we could, in a reasonable way, respond to that motion, so that we could reflect that, but also not put ourselves at risk in terms of having nowhere to invest our money, which would be a problem if that was the case. So following that meeting, the table in paragraph 8.8 sets out the changes that have been made, which removes sort of basically standard bank investments, but retaining our current account and the call account linked to that, but then removing most other bank investments except for those that have specific ESG investments, and we can continue to invest in those. To ensure that we have sufficient place for our money, we are proposing that we increase the balance we can place with local authorities, for each one up to £5 million. There's never been no change to kind of the overall limit, but kind of individual ones to reflect both, that there's going to be less opportunity to invest in banks because there's not actually that many ESG accounts with banks, and also there is an increasing number of local authorities that will not take less than £5 billion. So we think that's what's the risk in terms of diversification? There's more money in one place. We think that local authorities are relatively low risk, and therefore we think that's a sensible thing to take, a sensible step to take, and that was certainly supported in our discussions with MUFG and our treasury advisor there. Also looking at removing some of the other funds from the strategy which don't use or are no longer relevant, things like property funds. With LGR on the horizon, long-term investments is not the place to go at the moment, so they're being removed, and also ones we don't use as well, and also removing investments in more than 2 years with LGR in mind around that basis, around let's keep our cash relatively short-term on that basis. As I said, the rest of the report kind of reflects the general approach we're required to take, and sets various limits. Have to take any questions on the detail in there.
Thanks so much. Are there any questions from the committee on the investment strategy? Daniel.
Thanks, Chair. Yeah, no, just to say thanks everyone who's done work in kind of putting in some of the stuff in the motion in December. I think it's really well reflected. I think really well done. I just wondered, I know there's sometimes different criteria used to kind of determine what's an ESG investment. I just wondered which one we were using.
So our treasury advisors basically have a list of ESG investments, and we'll use their list to make sure that we're kind of following that. So obviously there will be variation between what they look like, but I think if they make the list from them in terms of being an ESG investment rather than a standard investment, we would look to adopt that. There are a few of them that only accept very high balances, but they do offer us an opportunity to club together with other local authorities to try and get enough money to kind of meet those thresholds. So we need to look at those in terms of that and sort of see if we can get investments to them. To be honest, we will tend to focus on local authorities where there's a market for it. At the moment, it's a very strong market in terms of local authorities looking for money from us to if we can invest in. So that will be our main focus, and also building societies because obviously they keep the money quite local in terms of the UK economy and cycling it through there. So that's where we'll kind of be our focus, but we do need to keep banks on the list, and we'll put with that caveat that we'll look at those ESG investments only.
Sure, great, thank you.
Other questions from the committee on the investment strategy or comments? I also say thank you to Ian for being so responsive to the motion that was brought by Councillor Winstanley and Councillor Wright Mason as well, and looking to get that actioned as quickly as you have done. Just one question: when you met with the Treasury advisors on this, did they raise any comments or concerns about the focusing on ESG oriented investments, particularly with any points to our financial sustainability and resilience?
Well, they always encourage us to ensure we have as wide a portfolio investments as possible. So with that caveat, they would always say, "We'll maximise the amount of place you can put your money," but appreciate that we passed that motion and therefore did need to do something around addressing that and to do that in the right way. So I think they accepted this was in fact they recommended this. This is the kind of way to balance that out, is to kind of keep that option open in terms of some bank investments being allowed, but also kind of focusing on those areas that we're more willing to invest in. I think they also reflect on the fact that there is a strong local authority market, building society market's not kind of goes in fluctuations a bit, but also we have less cash than we used to have, and that we have always got the stopgap of investing in government directly. That is always a sort of safe place to put our money if we need to.
Ian, did you want to jump in on that one?
I mean, Ian reflects that conversation well. I mean, I think very much my line with the obviously working with Ian and obviously having that conversation with our advisor was being very clear as to what the council had passed, and we needed to deliver upon that. But equally, we recognise that there are things that are difficult to do. That we are just not in a position, even if we wanted to change our bank account at the moment. It is a huge task, and and in advance of LGR or anything else, it's just not something that is advisable to do. Whereas clearly, as you can see, we've looked to actually move away from banks in other respects, but clearly, obviously, we've got an account with Lloyds, and it's important to be able to maintain that and all the direct debits and all the things that go through that. So hopefully this is I think quite a pragmatic solution, but actually responsive to what the council passed in that motion overwhelmingly and cross-party. So and I hope colleagues will welcome that, and obviously particularly thanks to Ian and his team who are obviously involved in those discussions, and actually getting to the point we've reached.
It's brilliant. Thanks so much for that. Any other questions or comments? I don't see any, so I'll go to the recommendations. That Finance, Audit and Risk Committee make recommendations to Cabinet on this strategy, and in relation to Cabinet's recommendations, they are that Cabinet recommends to Council that 2.1 approve the adoption of the investment strategy as attached to Appendix A, and 2.2 that Council approves the adoption of the 4 clauses in relation to the Code of Practice on Treasury Management, detailed in paragraphs 8.10 to 8.16 in the report. Can I have a proposer? Daniel, thank you. And can I have a seconder? Stuart, thank you. Debate on the investment strategy. think it's all been said to a certain extent. Again, just thank you and recognition of the fact and the swift work from Ian Cooper and the team, and Ian Albert as well, in conjunction to action those motions to make those shifts for the investments to responsible investments that we passed motion at council overall. And can we go to the vote with that, please?
Chair, that motion is carried.
Brilliant. And brings us to the end of our agenda. And item 10, our usual, anyone got anything they'd like to add to the agenda for possible future meetings, items for discussion? Always love to have some new items to have a chat about at Dew Point, but if you think of them at some point that hasn't prior come to you, do let me know, do let Ian know, and do let Sarah know. She'll be back as vice chair next time. So yeah. With that, unless there's anything else from anyone, brilliant. Bring the meeting to a close. Our next meeting is on Wednesday, 25th of March. Look forward to seeing you all then. Good evening, everyone. Thank you.
Thank you. Bye.
Thank you. Bye.